Hello there, welcome to David's Investment Analysis channel. Today I'm very excited to be talking about another special purpose acquisition company. And this time it's only a rumor and there's no definitive agreement in place yet. Hennessy Capital Acquisition Corp 4 is rumored to be merging with Canoo, an electric vehicle company. The news broke out after the market closed on Friday, so it'll be very interesting to see how the market will react on Monday morning. Again, this is only a rumor, there's no definitive agreement in place yet. And previous to this, there was actually rumored that Hennessy would be actually acquiring Proterra, an electric bus maker. In the next bit, I'll be discussing about Canoo, what they do and how they earn income, looking at the company's qualitative aspects of their business, and then followed with a quantitative analysis looking at the financials and valuation if there are any available. And then I'll follow with a conclusion whether I think the stock is bought at its current price and whether I own any shares of the business myself. I spent a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And once I reach 2,000 subscribers, I will be releasing a video on my top 7 individual stock holdings. So if you do not want to miss out on that, please do subscribe and click the bell notification. And if there's any other companies you would like me to cover in the future, please do leave in the comments below. Now let's get to it. Canoo is a Los Angeles-based company creating and offering unique vehicles for subscription only. Canoo's first vehicle will be launched in late 2021 and was designed for a world in which transportation is becoming increasingly electric, shared, and autonomous. Canoo is challenging the traditional way of building, offering, and using vehicles based on a threefold approach. A new business model that focuses on reducing production and infrastructure costs to make EVs more affordable to customers. A bold design capitalizing on the space EV technology affords catering to the needs of today's consumers. A subscription model that puts an end to ownership, providing a hassle and commitment-free car experience in modern cities. Canoo's global headquarters is in Los Angeles. The company also has an office in Silicon Valley and a Chinese headquarters in Shanghai. The company's global headquarters is located in a 90,000 square foot building in Torrance, California, where it also hosts the R&D facility and design studio. Founded in December 17th by a group of experienced automotive engineers and executives, and Canoo's team has since been complemented by various experts from successful tech and car companies. Today, Canoo has grown to around 300 employees, covering the entire value chain, bringing together a unique EV and a unique business model for a unique user experience. Let's look at the Canoo vehicle. Canoo's design philosophy is to change the way vehicles look, since there is no need for them to look like traditional cars like they do now. By leveraging the benefits of a flat EV platform, Canoo is able to create a unique vehicle that looks nothing like what is on the road today. Canoo's vehicle will move away from the traditional 3-box car design, which have separate compartments for the engine, passenger, and luggage. Instead, the company is embracing a minimalist design that maximizes interior space. Canoo's first vehicle will be the exterior footprint of a compact car with the interior space of a large SUV. Let's look at some of the specs. It takes only 28 minutes to charge approximately 80% of the battery. It has a range of 250 miles with 7 seats capacity, 0 screens, which to me is a bit odd because I do prefer screens in the car. I suppose this would reduce some of the costs. Top speed at 125 miles per hour, 0 to 60 miles per hour in 6.3 seconds. It is a rear-wheel drive with an option of all-wheel drive, and it's 100% steer-by-wire. The Canoo will be the first true steer-by-wire vehicle on the market without a hardwired connection between the steering wheel and its wheels. This means that Canoo steers by electric signals only. Steer-by-wire offers weight savings and paves the way for autonomous driving. Canoo has a complete freedom to locate the steering wheel to suit any cabin design and driver position. It also leads to a more responsive and smoother driving experience. Let's look at some of the qualitative factors, and we'll first look at the management team. Ulrich Krantz is the co-founder and CEO of Canoo. Previously, he worked for BMW for 30 years. In that time, he was a member of the company's research and development team where he took a lead role in developing some of the car maker's most innovative vehicles, tapping into his relentless drive to support the future of clean driving. This ultimately led Ulrich to found and lead the BMW i division, which was the electric and future mobility division of the company. His commitment to clean energy continued with his work on the BMW i3, which won 2 World Car of the Year awards, and i8 given the coveted title of World Green Car of the Year in 2015. Richard Kim is a co-founder and head of design and brand. He is best known for his work on BMW i3, i8 Concept Coupes, and i8 Concept Spider. Prior to Canoo, he worked at GM Hollywood, Volkswagen Auto Group, and Faraday Future. Richard obtained a degree in transportation design from Art Center College of Design in California in 2004, and later taught as a faculty instructor from 2008 to 2015. And something else that's interesting is co-founder and former CEO Stefan Krause left Canoo and have joined Fisker as a president and chief operating officer. You'll see a very similar business model between the two businesses. There isn't much information about the management team, but does appear to be knowledgeable and experienced. I do have some reservations of the management team with the departure of the former CEO that is now at Fisker Inc., which is a competitor. Let's look at the industry outlook. After entering commercial markets in the first half of the decade, electric car sales have soared. Only about 17,000 electric vehicles were on the streets in 2010, and by 2019, that number had increased to approximately 7.2 million. What you see here is two scenarios, one on the left which incorporates existing government policies, and on the right following sustainable development and climate goals. That is suggesting that the industry is growing around 25 to 40% annually between the two scenarios. And per research by Ali Market Research, the global electric vehicle market was valued at $162.34 billion in 2019 and is projected to reach $802.81 billion by 2027, registering a compound annual growth rate of 22.6%. North America and Europe are expected to witness considerable compound annual growth rates of 27.5% and 25.3% respectively during the 2020 to 2027 forecasted period. The cumulative share of the two segments was 40.1% in 2019 and is anticipated to reach 51% by 2027. And per markets, electric vehicles market is projected to reach 27 million units by 2030 from an estimated of 3.3 million in 2019, representing a compound annual growth rate of 21.1% between 2019 and 2030. The growth is driven by proactive government initiatives including subsidies, grants, and rebates and technological advancements. In addition, the demand for fuel-efficient, high-performance, and low-emission vehicles, along with stringent government rules and regulations toward vehicle emission, also drives the growth of the industry. Canoo stands to benefit from the growing industry globally. Let's look at some of the interesting facts about Canoo and their business model. Subscription model. Canoo believes that there is a better solution than traditional car ownership. Instead, Canoo will free its customer from the burden of ownership by offering a hassle and commitment-free EV membership for one monthly affordable price with no set end date. In 5 easy steps: 1. Become a member. 2. Receive the Canoo vehicle. 3. Drive any distance. 4. Enjoy the vehicle. And 5. Return and resume anytime. The membership may include services such as registration, maintenance, insurance management, and charging, all from a single app. Canoo brings the convenience and affordability of the well-known month-to-month membership model to the car industry, providing consumers with the convenience and value they deserve. Doesn't that sound very familiar? It sounds similar to Fisker's Flexi app that allows vehicle configuration, make purchases, schedule services, onboard diagnostics, schedule vehicle pickup, digital key, insurance and/or payments, and trade-in. Not only with the app that's similar, but also their flexibility leasing strategy that has no fixed terms and can cancel anytime. Is it a coincidence that they have a similar business model, and that the previous CEO and Canoo is now a president and CEO at Fisker? I'll leave that for you to conclude. While both Canoo and Fisker have a very unique, different business model compared to the traditional automakers, but if and when the business model works and is successful, there's no stopping of other automakers providing another similar option to their customers. Like Tesla, Volkswagen, GM, Lordstown, and all other automakers can all adjust and replicate the same business model of ownership. Their skateboard platform. Canoo is developing a skateboard architecture which will host a battery and electric drivetrain that can achieve up to 300 miles of range. All of Canoo's vehicles will share the same underpinning. Different cabin top hats will be mirrored on top to create unique vehicles. Leveraging the same fixed and flat skateboard allows for reduced R&D costs, efficient production, and a better use of interior space. The skateboard houses the most expensive components of the vehicle and is designed in a way that most crash testing does not need to be repeated per vehicle, reducing the vehicle's development cycle timeline and cost. The proprietary skateboard platform houses the battery and electric management systems, HVAC systems, driving machines, crash support, and suspension components. Partnership with Hyundai and Kia. Hyundai has committed to $87 billion over the next 5 years for future growth and is working with Canoo to modify the flat platform created for its futuristic vehicle and integrates the battery pack, motors, and other key components. Hyundai isn't investing in Canoo but is instead paying an undisclosed amount of its engineering services. Hyundai says it's got plans to create a variety of purpose-built vehicles that could come from Canoo's skateboard. The two companies would be co-developing all-electric platform based on Canoo's fully scalable proprietary skateboard design for the upcoming Hyundai and Kia EVs. Hyundai expects the new platform using Canoo's skateboard architecture to allow for simplified and standardized development process, lowering vehicle prices. Canoo is also partnering with NVIDIA and will be using their AI platform to power Canoo's ADAS system. The NVIDIA Drive HCAC platform provides high-performance, energy-efficient compute for object detection and sensor fusion. State-of-the-art algorithms will inform the driver of what's around the vehicle, including cross-traffic alerts, blind spot detection, and pedestrian detection, as well as convenience features such as adaptive cruise control and lane centering control. The software-defined platform also allows the more advanced features like auto lane change, traffic light recognition, and evasive steering to be introduced when they become available. Another partnership is with BlackBerry. BlackBerry and Canoo announced the ADAS system for the company's membership-based semi-autonomous EVs that will be powered by BlackBerry QNX operating system, including radar sensors, parking sensors, and cameras. Canoo aims to bring the first production of vehicles to the market with advanced Level 2 or Level 2.5 autonomous features as standard at the end of 2021. Level 2.5 features are consistent with partial autonomy, enabling the vehicle to manage acceleration, steering, and monitor components of its environment in certain conditions. In several interviews with co-founders Ulrich and Richard, they mentioned that they are planning to roll out the vehicle on a city-by-city basis with the first launch in Los Angeles. They said that 8 to 10 cities represents more than 70% of all EV production in the US, and their plan is to first target these 8 to 10 cities. After they launch in the US, they will consider launching the vehicle in China, the largest EV market. Let's look at some of the risks. Some of the items that would hinder the global growth of electric vehicles include the lack of standardization of charging infrastructure, the general higher cost of EVs compared to internal combustion engine vehicles, stringent rules for installation of charging stations, and limited range of EVs, that these would present a risk for Canoo. Several competition coming into the market can be challenging for Canoo to compete with. Some of its competitors are large organizations like Volkswagen, Toyota, Tesla, NIO, Nikola, Rivian, and Fisker, to name just a few. It is only a rumor that Hennessy Capital Acquisition Corp and Canoo would be merging, and nothing is confirmed yet. If Hennessy decides to back out and turn down all discussions with potential targets, the stock price could go down to closer to $10.30 to the redemption value. There has been a lot of speculation that a deal would get done soon, and it is mainly why it's currently trading at $11.13. Let's look at the quantitative analysis. Since Canoo is a private company, there isn't any financial information available. However, per Bloomberg article, Hennessy raised about $300 million in new equity for the deal, and would take Canoo public and value the combined company at more than $2 billion. If we strip out the $300 million cash, the enterprise value of the company would be approximately $1.7 billion. Let's look at the valuation compared to comparable companies. The current market cap of NIO is $15.9 billion, Tesla is $270.7 billion, Nikola is $13.3 billion, Fisker is $3.6 billion, Lordstown is $2 billion, and Canoo is estimated to be $2 billion. The enterprise value of the merger transaction is $1.9 billion for Fisker, $965 million for Lordstown, and $1.7 billion for Canoo. Fisker and Lordstown have similar price to estimated 2024 sales, and I would assume Canoo would be traded around similar valuations. Since there is limited information, I cannot tell whether Canoo or Hennessy is over or undervalued. The current price of the stock is $11.13, which provides limited downside in the near future, since the redemption value is $10.30, suggesting a limited downside of 8%, but it can go up a lot depending on the valuation of the company. Conclusion. In my opinion, today's price of $11.13 I think is a speculative buy because of the following reasons. Canoo is in the EV industry that is expected to grow 20 to 30% annually, so the opportunity would be there for Canoo to grow. There's a lot of excitement in this industry. With the recent huge surge in EV stocks like Hyliion, NIO, Nikola, Tesla, Canoo is now another option. I believe there is enough demand for several successful EV companies that can coexist in this industry. Canoo has a very unique business model that uses a single app for registration, maintenance, insurance management, and charging. Canoo brings the convenience and affordability of a well-known month-to-month membership model to the car industry, providing consumers with convenience and value. Canoo has a proprietary skateboard platform that is currently being monetized, and it will be used by Hyundai and Kia vehicles. Canoo has strategic partnerships with Hyundai to co-develop a new skateboard platform, with NVIDIA and BlackBerry for advanced driving assistance systems in Canoo vehicles. There is limited downside from here to $10.30 with a lot of potential on the upside. But I do have some concerns. The lack of standardization of charging infrastructure, the general higher cost of EVs, stringent rules for installation of charging stations, and limited range of EVs presents a risk to slow the growth of EV industry. Several competitors coming into the market can be challenging for Canoo to compete with. Some of its competitors are large organizations like Volkswagen, Toyota, Tesla, NIO, Nikola, Rivian, and Fisker. There's no financial information or projections to evaluate the company. The company likely has, if any, minimal sales. If Hennessy leaves all discussions with targets, the share price can go down to $10.30, the redemption value. Disclosure: I currently do own some shares of HCAC, and it's a small portion of my portfolio. I haven't decided on what I'll be doing with the shares, but likely will be following the stock price in the coming week to decide on what I'll be doing with it. That's it for now. I spent a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And when I have 2,000 subscribers, I will be releasing a video on my top 7 holdings. So if you do not want to miss out on that, please do subscribe and click the bell notification. Thank you for watching. Until then, see you next time.